That's right, believe it or not, ladies and gentlemen, the Florida market is still standing strong. As you can see the numbers on my screen there, it is not budging very much, but that's the years over years numbers. There are other markets though that are taking a hit, such as Tampa and Orlando. And as you've seen in my previous housing market reports, we've seen Punta Gorda, we've seen Port Charlotte, we've seen Fort Myers, and other markets they've taken a hit back to pretty much 2019 prices at this point. So there are, other areas definitely on the Gulf Coast that are taking a huge hit right now. Insurance costs, property taxes, cost of living in general. The incomes there, they're just not being able to keep up with those adjustments, and so they are taking a hard hit right now. But we're getting a lot of migration back into the state right now. Obviously, it's snowbird season, and we are seeing plates from all over the country and even Canada too. So we do have definitely a lot of migration, and I do think that this past winter up north is going to change some people's minds about not coming to Florida because the politics is a big deal, but when it comes to the quality of your life and being able to be somewhere warm year round, it's just going to mentally, psychology is just going to just say, you know what, it doesn't matter. And, you can always, change the things locally around you too or move to a city that's, more to your liking anyway. So, it's just one of those things where it's just going to be a better place to live here overall because everywhere else is outside of the West Coast. They've been staying warm, but as you can see, I'm a little chilly right now too. So it's just one of those things. But it's sunny every day. We've only had like one cloudy day, and even then, it's just nice to take a break from the sun sometimes. But the sun definitely does help warm up the day. As it's going, I think with the highs, we'll start like in the 30s and we'll get into the 50s and 60s, and that's rather comfortable for most people, especially from the north. They prefer that weather, and definitely going to prefer that over shoveling feet of snow and negative temperatures that they've been seeing. So we're here and I'm here for you. So let me know when you're ready to move down. Like I said, I covered, if you can see on my screen, I covered Tampa Bay and Central Florida. So wherever you're thinking about moving here in those areas, I got you covered. I know the market's pretty well, and I can find you exactly what you're trying to find, where you're trying to go, and find that Florida lifestyle you're trying to live. So don't forget to leave your local housing markets that you'd like to see. I can cover those into the future. Leave them down in the comments below, and I appreciate you guys because the more information that I'm getting from you, where you're wanting to see what's going on in activity and prices and inventory and all that will help me just create more content and provide more value for you as while I'm doing these videos. As you can see, I'm with a new realty company, a new brokerage, 54 Realty now. It's been exciting and having this change because I'm definitely getting a lot more activity, more movement, which is nice because that means I can help more people. And so, it's been really nice to be able to be also in a brick and mortar company, brokerage, so that way I can actually be around fellow agents instead of being a cloud base and not really ever getting to see them. So that's been a nice change up. Definitely realize that the cloud platform, work from home platform, is definitely not for me permanently. I can still work from home and go into the shop, and it's nice to just being able to have that hybrid. So, without further ado, let's get into the numbers. It's enough about me, so let's get into what you guys are here for. All right, so as usual, we'll be going through the hard numbers of Florida, then Tampa, and then Orlando. And then obviously, as you know me, I'm big into graphs and charts, so I'll be digging into the charts numbers so we can see what was happening in the past, what's going on right now currently, and it'll give us a better indication of what can happen into the future. So, closed sales were up 5.5% year over year from 20,784 units to 22,007 units. So we are getting more buyer activity in the market in the month of December. Cash sales were up 4.3% from 5,853 to 6,105. Median sales price were flat at $415,000. Average sales price were up 6.6% from $589,348 to $628,503. The median percent of original list price is just down 1% from 95.7 to 94.7. Median time to contract, we are up 12.5% from 48 days to 54 days. Median time to sale, we're up 3.3% from 90 days to 93 days. New pending sales is up 5.4% from 16,288 to 17,163. New listings were down 7.9% from 23,053 to 21,225. Pending inventory were up 6.3% from 20,758 to 22,070. Active inventory were up 0.2% from 98,429 units to 98,638. And months of supply has gone down 2.1% from 4.7 to 4.6 months. And so, you see the news that foreclosures are rising, and Florida is a doomsday, and there's a lot of other places too. So, I want to put some more context into that, right? So, as you can see, I have gone back all the way to January 2028, or sorry, 2008, and you can see how much more inventory and foreclosures right here on the market. And the peak, we were about 17,465 in the entire state of Florida, and that was in December of 2010. Now we're at 731 units. So while some news reports are saying that we're up 600%, year over year, month on month, what have you, your baseline number is the most important thing. You can say you're up, 1,000%, but if your baseline number is 3, well, it's not really gonna matter because it's really not that many units. So, while the percent sounds scary, the math is what matters the most. So, just wanted to give you guys, what it looks like in the foreclosure market right now, what's going on in Florida, and obviously there you see this decline right now in active units. Going on right now in the market. Now, it does usually turn around December and then starts climbing back up. And so I'm sure we'll start seeing that again. There are some outliers in between those couple of years, especially, this was a pandemic and rates were starting to go up. And so, the goal for the Fed was to make inventory go back on the market. And that's what they did. The market slowed down a lot, and but on a usual trend, you start seeing the January rollover. You see this is a heavy time during the pandemic. People were migrating between 21 and 22. So this right here is your main outlier. But as you can see, typically we go from December, January, it takes up a little bit, and then you get some absorption. But we're starting to kind of return to the normal, return to the mean, if you will. And I can see inventory ticking up just a little bit, but probably not by much. I think sellers are starting to come back into reality of what their price should be, and so we'll see how that goes into the future. But as far as Tampa goes, we're going to cover that next. Close the hard numbers first. Again, closed sales were up 4% from 300 to 312. Cash sales were down 10.4% from 96 to 86, which I'm kind of surprised. I would have thought some of the investors would have came back into the market, and that would have been going up a little bit, but maybe it's just not the right kind of inventory that they're looking for. And see, and also let's see. So, all right, so median sales price we're down just 0.5% from $477,500 to $475,000. Average sales price were up 5.3% from $688,374 to $725,037. Median percent of original list price we're down 2.1% from 95.3% to 93.3%. So as we can see, sellers are pricing their houses a little too much and not meeting the market, so they have to take those price reductions. We are seeing definitely, and I've seen it too. I'm working with a buyer working in the million, above the $1 million mark, and we're seeing price reductions definitely by $100,000, $200,000. And then also, once we start seeing it close to, the median price, we're starting to see $20,000, $30,000, sometimes $50,000 in price reductions. And I'm working with some buyers right now as well who are looking below the $300,000 mark, and we're seeing anywhere from like $5,000 to $10,000 in price cuts. So the sellers are definitely overpricing just a little bit at the moment to meet the market, especially this time of the year. But anyways, so median time to contract, we're up 4.7% from 39 days to 58 days. Median time to sale, we're up 19.5% from 77 days to 92 days. That has also to do with things with inspections. And if you haven't seen my last insurance update video, I definitely recommend you guys checking that out, so that way you can see exactly what's going on. And I expect in April, there's actually going to be changes happening to the 4-point limit. So if you haven't seen that video, I recommend checking that one out after this one so you can see what changes are going to be happening in the Florida market as far as 4 point wind mitigation inspections are going to be changing into that report, which this could actually change the amount of days, the time to sale, as inspections may take longer to make repairs and go from there. So new pending sales were down 7.4% from 280 to 213. New listings were down 13.7% from 278 to 240. And now pending inventory, we're down 7.9% from 317 to 292. Active inventory, we're up 1.6% from 1,129 to 1,147. Months of supply and inventory, we dropped 2.6% from 3.8 months to 3.7 months. And now we're going to get into the median prices. So as you can see, prices are still, kind of going sideways here. We have seen a drop about 7.5% from the peak of June of 2024, from 507,500 to $475,000 currently. But prices are still going up sideways. Active inventory, again, I want to cover foreclosures, right? Because that's another one, again, what the news is saying. So back in 2010, December 2010, we had 305 units in foreclosure. Currently, we have 9. And if you see here going through this numbers, it is going up. If you see rolling past here, there was obviously no foreclosure, pretty much no foreclosures at all during the pandemic period. So we are seeing a slight uptick of units going on the market, and this again goes back to my point of foreclosures are up 100 and 300 400%. But okay, well, if you went from 4 or if went from 2 and now you're up to 4, so it just, percentages doesn't matter. Like, what was the number that your baseline is off of, right? And as you can see here, this is the main hit here right there in the active inventory is why we're dropping down so hard. I'm definitely feel like a lot of sellers are probably realizing that they weren't going to get the price that they wanted, so they're deciding to become landlords and just rent the unit out. They've had a lot of equity price appreciation, so they're deciding to rent their homes out and just cash flow those properties. But as you can see, you guys, from the peak of the market of how many units we actually had on the market, we had 2,820 units, and now we're half of that currently. So it's not even half of that, actually, like a third of that. So it's a whole different ball game this time, and then we're not even taking consideration population growth either. Obviously, we've had a lot of migration come down here. We've had a lot of people having babies and forming families. So, people graduating between 2008, and the job market is completely different now too. So, it's just a different economy. We can't compare the two anymore because everyone's like, oh, it's 2008 again. I'm like, no, it's not. It's a whole new ball game. Now, what we see in the future is going to be different, but it's not what it was back then. And this is the price breakdown of why we're seeing a lot of those price reductions right happening, because we can see a lot of the inventory that is on the market, especially at this price point. And this is the rollover. It's not even just absorption; it's just that they're not selling, but the sellers just take them off the market. So let me see if there is a cancellation tab because I never looked at that. So no, there's no. It doesn't give me any data on cancellation, unfortunately. But as you can see here, this is your range of where you're going to be seeing the most price drops versus, more your entry level housing where you're from 200,000 to 300,000 because there's not very many units on the market. I have when I'm searching for houses for the buyers in these price points, it's there. It's definitely not as many. It's sometimes it's hard to find exactly what they get, but I've been doing actually a really good job of finding what they're looking for. And I had a buyer who was now like trying to get their situation more set up more quickly because of how well I did the search on it for them. So that's really exciting. I'm happy that I'm able to do that for them. But as you can see, back from 2008, pre-pandemic, where our inventory was to what it is then, it's just a shortage. So as these aren't transacting as much, there's not going to be much, there's not going to be as many transactions happening to pull that price down. But where you're seeing a lot of the price cuts are seeing in this price range here. Um, so now let's go into Orlando. My favorite city in probably all of Florida. I do love Tampa, but there's just something about the nature in Orlando, at least North Orlando. I love North Orlando. But anyways, closed sales were up 11.7% from 106 to 182. Closed cash sales were up 4.8% from 42 to 44. Cash sales as a percentage cash sales as a percentage of closed sales were down 6.2% from 25.8% to 24.2%. Median sales price has gone up 3% year over year from 540,000 to $556,245. Average sales price were up 3% from $726,806 to $748,940. Median percent of original list price were down 2.4% from 97% to 94.7%. Again, sellers are overpricing their houses just a little bit too much. Median times of contract were up 63% from 27 days to 44 days. Reason for that is, there's a lot of inventory on the market. And the median time to sale is 16.9% from 71 days to 83 days. New pending sales up 7.6% from 118 to 127. New listings were down 5.7% from 157 to 148. Pending inventory were up 2.4% from 168 to 172. Active inventory were up 15.1% from 503 to 579 units. And months of supply, it is up 17.2% from 2.9 to 3.4. All right, and so here's the active inventory. Oh, I don't have the foreclosure data up here. Let's apply that. So again, currently right now we have four. There's 4 units in the entire city of Orlando, and this is not MSA. This is Orlando, and at the peak we're at 188. So you can see, again, and this is just kind of going up and down, up and down. I think the highest there was 6. I just saw in here 6. So there's not much foreclosure activity going on right now currently in the market. Obviously this is for December, but the trend has been ones and twos, threes, maybe fours. So I can't imagine January, February, March being anything different. Because now we're in February and January's data should be coming out in about 2 weeks. So I'll have another housing report for you guys shortly. So the top of the amount of data we had at the peak was 1,432 units back in 2008, and now we're at 570. So not much inventory on the market right now, and again, we'll probably start seeing an uptrend in inventory here coming here in the very near future as the spring selling market is coming on the horizon. And as we can see here again, the amount of dollar inventory is where we're seeing a lot of the delistings and where most of the transactions are happening, and that's what's keeping the average and the median prices up as time goes on. So let's see here. Currently, 171 units, just under a million, and then 156 units right around the median price, where we're not having as much inventory here on the market at what we would call the entry level price at this point to purchase a home. I have quite a few buyers right now looking in between this price category, and you can see how much inventory there wasn't back in 2008. And as those transactions were happening, this was getting absorbed. So the absorption is what matters, right? So you're not absorbing as much here compared to here, versus now it's the other way around. Here versus here, that's what's keeping prices up, and this is what made prices drop at the median until they actually saw a bottom there. So that's what's going on in the active inventory in Orlando. And then here's the median sales price. So Orlando saw a pretty big hit from the peak of June of 2024 from a $615,000 to $556,204. It's about a 10% decrease. Tampa saw about a 7.5% increase. So Orlando prices have been coming down at the median. Of course, as I always say, every local housing market is completely different down to the subdivision. What's going on in Winter Park doesn't mean what's going on in Altamont Springs, what's going on in Groveland, what's going on in St. Cloud, or what's going on in Apopka. Just like here in Tampa, what's going on in downtown Tampa isn't the same thing as what's going to happen in Lutz and Land Lakes. and Carrollwood, it's just everything goes down hyper local to your housing market, down to the zip code, down to the subdivision. So those are things to take in consideration when you are actually, doing a data analysis on what's going on in your local housing market. So that's going to wrap up this video. I want to keep these more short than before because I know I get really into the nitty gritty and I don't want to lose you guys. So I hope you found this valuable. If you did, please hit the like, subscribe, share this video with somebody that you know if they're interested to come down here, and see what's going on in the Florida market. And if there's, like I said, any other markets that you guys want me to cover in the future, leave them down in the comments so I can cover those for you. And then we can set up a meet in person so that way I'm gonna give you a deeper dive into what's going on. Also, in those occasions, just let me know what you want to see. We got a bunch of different things that I can look at: active inventory, average sales price, and pull up those charts for you because that's going to definitely tell you a lot of what painting the picture of what's going on outside of like seeing hard numbers is one thing, but for me, I like seeing backwards looking data so that way I can get a comparison of what's actually like what's distressing, what's being in distress at the moment, in comparison. But yeah, so I hope you guys enjoyed this video, and I will catch you on the next one. Have a great day.